Welcome to Better Returns, where you will learn how to escape the volatility of the stock market by passively investing in real estate like a pro. 90% of millionaires earned and maintained their wealth by investing in real estate. We will share real-life examples from savvy investors so you can do the same. This show is for educational purposes only and should not be considered legal, tax, or investment advice. In college, he carried a briefcase instead of a backpack to class. Your host and my dad, Matt Hansen.
I'd like to welcome to the show my good friend, Rick Martin. Rick has been investing in real estate since 1997. He's the founder of Fortress Federation Investments, where it provides value-add multifamily investment opportunities in the Southeast, Texas, and Arizona. He helps investors build generational wealth and multiple income streams. Fortress Federation is currently a general partner in over 2,200 units. Rick is also a limited partner across many syndications, which gives him great insight to passive investing. And I must say, he puts out a monthly newsletter from the Fortress Federation, one of the few newsletters that I read every single month. He somehow is able to attract me and other people to read that. It's really good content about passively investing and good, always has good stories in there, something relevant. And just want to commend you on that. I love getting your newsletter. That's not a lot of people say that, but I'm going to say it, Rick. It's out there.
Yeah. You told me that off camera, and I was very flattered. I was happy to hear that. It's always good to know somebody's reading, you, my mom, maybe my sister. It's good to know the three of you are at least reading it.
We're fans.
No,
well, I always like to ask,
I'm sorry to cut you. I enjoy writing the newsletter. I get a kick out of it, and I do get good feedback. In all seriousness, and I'm glad. I like to pepper in something personal. Just what's going on with me. Maybe people can identify with that. Not just keep it just boring, black and white. Here are the numbers. This is the economy, and get right into it. Try to make it a little fun. So anyway, I appreciate that, man.
I appreciate you. So I like to get the origin story. Like, how did Rick get into real estate? Particularly, you're doing large syndications and helping a lot of passive investors. So how did you stumble across this?
I did stumble across it. Didn't know much about investing other than, your best investment you can make is, buy your own residence, right? So that was the goal. This is years ago, back a long time ago. Let's not age ourselves here, man. But it was a long time ago, and I set out to buy a house. I had a girlfriend. We were going to get married. That didn't work out, but the house worked out. I hung on to the house. She was gone, but I had the house. And actually it was a interesting time for me, very volatile. I was kind of leaving the music career, the aspirations of being a musician. And I had to move on and go to basically film school at that time, or a media school, which was my prior life. And I had to either sell it or put it up for rent. So I put it up for rent, and that's how the light bulb went off. I was getting these rent checks, which was very helpful being a broke student as I was going back to school. I originally attended the University of Washington, was doing some stuff, had some jobs that were not very inspiring, let's say. So I was really scratching that dream of being a musician on the side. And then slowly but surely, real estate kind of became my side gig because I could see the big payoffs. I mentioned the mailbox money. That was nice. But boy, once I turned around and I sold that thing, that was the biggest wealth generator that I'd ever had. So I knew I was on the right track. I was doing all the like dollar cost averaging and mutual funds, and that was going nowhere. It really was not. I think, gosh, right around the .com crash, I didn't make a cent for like 10 years on my stocks, but the real estate was still doing well. And then after the real estate crash, 2008, things were on sale, but I did have a few properties previous to the crash that weren't doing so well. I was a little shy, like just man, the world, when you're in it, it feels bad, right? The recession felt bad. But still, I I recognize that, hey, I can double down and get myself out of this, and did manage to hang on to the other properties that I had before 2008, and then continue to build after. It was tough getting loans back then. Like the capital markets were pretty dried up. Like we were paying cash um out in Palm Desert, which was cheap, like 50 grand for a property in California. That's kind of crazy to think. We did that. Eventually got onto the whole out of state investing thing. I mean, that was out of state. I'd done some like investing in Nevada. I'd moved down from Seattle. That was where my first house was. Came to California, did some investing in California, did some investing in Nevada, but did my first big, like long distance out of state investment in the Midwest. And that was in Indianapolis. And then did a little bit in Columbus. And that's when I started to find out about multifamily, and started to look over the shoulder of an experienced operator in Columbus. And he was, I wouldn't call him a mentor, but he was very helpful. And then just started growing my network. That's how you and I ran into each other, right? We were at it was a Rodcliffe, I think.
Yeah, Rodcliffe, almost 3 years ago in January.
Yeah. And you know how it is. Like, there's a lot of great people in this biz. You don't click with everybody, but I could say, hey, this is a good dude. And you and I, we were talking about doing deals right out of that. And that's kind of how it works, right? Network is definitely a big part of it. But I would say, before I ever started getting actively involved, I think I invested in 7 syndications passively. Still do today, because I like building them up and being able to count on like a chunk of passive cash flow, just in case things get a little slow in the other department. Or, hey, my wife and I were going to Fiji in a week, and back in the day when I was freelancing, I didn't have passive income. If I wasn't working, I wasn't making a cent, so now it's kind of like I have a paid vacation. Now I know, W-2 workers, they get paid vacations, but they only get 2 weeks off a year, and that's no way to live. Sorry to all you W-2 employees. So I think it's a good goal to build up as much passive income as you can, because you don't have to rely on anybody. Yeah, you have to choose wisely, make sound investments, vet who's ever running these deals, but certainly is nice having that come in. It's peace of mind, I would say.
So you the classic story. You were an accidental landlord. You had a house, moved out of it, and you rented it and realized, hold it, I can make money doing this. And then, probably the last 3 years, and I didn't realize you were a limited partner in a bunch of deals beforehand. So then you started to become a general partner about 3 years ago when we met, is when you started actually being involved in syndication and helping raise capital and run deals. So that's kind of when you really went full, we'll transition fully into, not fully, but into multifamily. And that was your focus then at that point. Did you still own any single family homes now, even today?
I have a fourplex.
Oh, that's not bad.
I've sold everything. You can 1031 into syndications. You can do that. If you really would just want to get out of being a landlord. The fourplex, it still does okay. It's probably something I'll eventually, get rid of. Right now, it's okay. I thought, man, maybe I'll get a vacation rental. Although I was just reading, Airbnb market is saturated right now, and properties are sitting vacant because everybody wanted to jump into that. Yeah, for the most part, multifamily is my focus. I like the resistance of it to recessions. You always need a place to live, and it's just not going anywhere.
Yep, the projections are so strong. There's a shortage of housing in the United States, and I'd heard some stats that like 1 in 7 houses are owned by a corporation now, or an investor, which is incredible. Which means people aren't going to be able to buy single family homes; they're going to rent them, and then some of them will end up rent apartments. So there's a whole shift going on, some crazy stuff out there. But multifamily apartments not going to go away. Demand's going to continue to grow, particularly in the southern states where you and I invest. That's where the population is migrating to. So of course there's a shortage of housing in Arizona, Florida, Texas, and those southern states. So that's perfect.
Yeah. Yeah. No, that's a great point. I'm always talking about that. How I know it's frustrating for people. Like there's just nothing out there. There's no supply. There's nothing to buy to live in. I don't know how they're going to fix this issue. But a lot of people are capitalizing on it in that they're developing build to rent communities. It's becoming less and less the American dream to own, because it financially doesn't make much sense unless you bought a long time ago. But out here in California, oh my gosh, you can't get value for your money. That's kind of interesting background part of my story. Like my wife and I, we had a duplex in Mid Wilshire, nice area here in LA, and we decided to sell it, and we're like, should we go buy a fancy place out by the beach, or should we go buy an apartment? And instead of paying $6,000 in mortgage, maybe we could get paid $5-6 grand in cash flow. The whole what's his face, the purple book Kiyosaki thing, where don't get liabilities, get assets. And that,
Right.
I had read that book not that long before that moment where I had the discussion with my wife, and my wife didn't even have to read the book. She got it. I'm lucky that way. Like she was into building up, just being financially free was more important to us than having the American dream of the big house on the beach or whatever.
Yeah. We're turning into a renter's nation. But the other thing is that your point is that I don't think I'll ever buy a house. I've got, a lake house here in Michigan, and then I've got a house in Florida that I'm renting out now. But like, I'm not going to buy any more houses. Take that money and I'm going to invest in real estate. And if I want to rent something on the ocean, eventually I'll be able to do that, because I want to be able to move around and be mobile. I'm all about the experience, not the accumulation of material things, at
Yeah.
my point. And I think you're the same way. Is what you're saying is like, rather the cash than locked into a house. That's all you're going to, you have to, now you feel obligated to stay there all the time.
Oh my gosh.
Yeah. I totally agree with you.
And I was reading some other article about all the people that bought homes in 2021, sight unseen, not doing, not getting inspections. And now not only are they having a hard time meeting their mortgage, but they can't keep up with all the repairs, and it's the whole the money pit thing. And gosh, that's some stress in life you don't need. Why not just have plenty of equity that you can actually tap into and use, as opposed to you're paying the mortgage every month? It's it's a radical thought for a lot of people, but really financially it makes a ton of sense.
Well, let's get into the passive investors. What are you seeing people are looking for, and what are you guys doing to make deals work nowadays? Because it's tough. We have this cap compression, and people are overpaying, and it's different. Apartments are valued based on the net operating income, not the comps around us. So we're not, everybody, when they hear real estate, they think the residential market. Well, no, the areas we play in are commercial, totally different game. So if we can increase, the value of the property. So what are you guys doing in the deals that you're looking at now to make sure they're still viable and good investments for your passive investors?
Well, first of all, people, they have short memories. Or actually I should say they have long memories. They remember just a couple years ago when they were getting 8% cash on cash regularly. And we all know what's going on, in the lending environment right now. Interest rates are way up, and it impacts the costs or the mortgage payment on an apartment, just like it does a single family home. It just makes it that much more expensive, and it squeezes the cash flow. So investors who are expecting what they were getting a couple years ago might feel disappointed getting 5%, 6% cash on cash, just forgetting about the upside for a moment. But I remind those people, you could be getting, yes, 5-6% cash on cash, monthly, quarterly, whatever, however it's paid out of your syndication. Then you have the upside to look forward to. So maybe on an annualized basis, you're making anywhere from 15 to 20%. And, I just ask people to compare that to the 30% they just lost in their portfolio in the stock market. I think people say, oh, the stock market's on sale right now. Well, for how long? And it's such a betting man's game. Like, yeah, good luck. For me, I've done both. I do stocks, I do real estate, but right now I'm probably like 80% in real estate. And the reason for that is because it grows over time. It's like clockwork. Whereas my stocks, I don't know, man. They go up, they go down, they go up. And honestly, my portfolio kind of where it's always been, and it's down now, of course, and hopefully it'll get back to where it was. But anyway, to answer your question, what are we doing? It's tricky, for one thing, buyers are having a hard time closing. So how do they close? As a syndicator, we have to make the returns attractive enough. So now we have some expensive borrowing costs to deal with. So yeah, there's a variety of things that we've done. One is, whereas before you get like 75 LTV on a loan, well, we're down to 56% LTV on your loan. And you hear that and you think, well, gosh, that must be a very expensive mortgage. So we bring in something called preferred equity, which is just a partner. They're more expensive than going to the bank and getting a loan, but they're less expensive than going out to a bunch of private investors like your listeners. And you blend that rate, and lo and behold, it becomes the deal pencils. And now at least you can bring a deal to people where they're getting 6% cash on cash. They still have the potential to make 20% annualized, double their money in 5 years. That's one thing. Another thing that we did was we actually went partial recourse on a loan for about 20%. We actually stuck our necks out. We're personally accountable for 20% of that loan, meaning they could come after us personally if
General partners,
if we didn't perform. Of course, we did all our due diligence. We mitigated that risk. Didn't want to take on too much risk, so we did a lot of due diligence on that, and it turned out to be worth it. And that reduced the spread, what the banks charge, in a large way, to where it improved the returns for the investors. I would say 4% on average.
Wow.
And improved the equity multiple, and improved the cash on cash, and just improved the deal. So there are different ways you can go about it. Rather than purchasing a rate cap, which is a sunk cost, rate cap basically limits how much exposure do you have to rising interest rates. It caps it off for those that don't understand. Well, we found a bank that they even suggested to us that we could actually escrow reserves, meaning hold as much money as it would cost for the rate cap in an account. And if we don't end up having to use all those reserves to make up, for rising interest rates, we can actually return that money back to investors and improve the returns beyond what we were projecting. So, just a variety of things you have to do, to pivot in this environment, to make it happen. Because on the flip side, we do have a couple of properties that we've been trying to sell, and the buyers they're having a very difficult time closing. In fact, we're talking 6 months, and they're still buying extensions. And so, yeah, you have to be crafty, but it can happen.
That's creative. That's really good. Those are some techniques that I had not even heard of. That's pretty impressive. The bottom line is go ahead.
And if you think about it, where do you think interest rates will be, I don't know, 2-3 years from now? You think they're going to be higher? Or you think they're going to be lower?
I think they're going to be lower.
Me too. And we don't know for sure, but if you look at the history of the Fed funds rate, everybody says, oh, mortgages aren't directly tied to they are. I don't care what people say. The Fed is basically the bank's managers, or
Yep.
and but I agree. So if you could get into a deal that pencils now, 2-3 years out down the road, you can refinance into some attractive fixed debt, and you're going to improve the cash flow a ton on that deal. So, a deal that's attractive now could get really attractive in a couple years.
Yeah.
So I think the future is actually pretty bright.
That's really good. That's good. Yeah, it's the cash out refi that they do with single family homes. Like you can cash out refi, if the interest rates go down significantly and your asset's performing well. So it's a good opportunity potentially then as well. So
Absolutely.
we were talking about this earlier before the call. Like what do you say to people that are saying, you know what, I'm going to keep all my money sitting in the bank or in the money market fund or in the stock market? First off, I don't want to take a hit. Second off, there's people still having money sitting in the bank because they're waiting for the economy to turn around. What is your advice to those individuals? What do you do?
Yeah, I used to be one of those people who would kind of sit on the sideline and stockpile cash. Cash is king, right? And wait for the perfect time to buy. That's a mistake, right now, purchasing power, we're kind of debating what it is. It could be, what they're saying is 8-9%, could be 15%. So if you have money sitting intentionally sitting in a money market, you're essentially losing, 8 to 15% a year on your money. But I still don't think people wrap their heads around. Can't really wrap their heads around inflation. Well, my paycheck's the same. I mean, I'm earning this much. They don't understand it until maybe they really, they go by the pump and they're like, whoa, that just cost $80 to fill up my gas tank. Or at the end of the month, you're like, whoa, I spent more than I made this month. We're all unfortunately losing money unless we have a hedge. And I'm biased, but there's no better hedge than real estate. And if you're waiting around for deals to come back, they're offering 8 to 10% cash on cash. You're losing money as you're doing it. Your nest egg is reducing, so now you have less money to invest in those deals. So you might as well invest today at 5 to 6%. Get ahead. Like I say, things could improve anyway. And it just so happens that rents rise with inflation. Rents can only get so high. I imagine we're kind of leveling out. But there's still ways to increase the efficiency of the operations and to increase that delta between your revenues and your expenses, and still increase the value of the asset. So my advice is, I had this conversation. I'm not going to say who it was. She's a relative. And her financial advisor told her just to keep your money in a money market. And I was like, don't do that, please. And here's why. Just kind of what I talked about. So it's that velocity of money. Maybe you're not making as much as you thought you were, but you're making money, and that money is making money on top of that money. Once you get your money working for yourself or for itself, it grows exponentially. You just have to kind of keep the ball moving forward. The analogy I had was the snowball effect. Yeah, okay, you roll a snowball down the hill, maybe it's rolling slower and you're accumulating less mass, and that could be likened to today's market, since the returns aren't what they were. But if you just let that snowball sit there in the sun not doing anything, it's just going to melt away into nothing. So keep that snowball effect going, no matter what. Don't be so concerned with making the maximum. You're never going to time it right. Don't try to time it. Just do it, and lo and behold, you're going to have a nice nest egg in front of you.
Outstanding advice. Okay, we're going to move on to our lightning round now. These are 5 fun questions to get to know Rick a little bit better.
And I don't know
you ready,
these
Rick?
questions either.
Are you ready?
No, because I'm not prepared. I hope you don't throw me any curveballs. But no,
You're the
let's do it.
expert. You're the expert on you. You can do this.
Yeah, yeah. And by the way, can we tell the audience I do have a bit of a sore throat? That's why I have this sultry. What do I say? What was his name? Who's the singer?
Barry White. He's got the
Barry
Barry
White.
White voice he's doing
Yeah,
for everyone. I call it
yeah,
the gravelly. He calls it Barry White,
yeah.
but it is.
Just
And thanks for coming on the show. I know you're a little under the weather today.
no,
You're
no, no.
such a
I'm
trooper. You
feeling
really
good. I was
are.
looking forward to this. But let's do the lightning round. The
Lightning
lightning
round.
round.
Number one. What was your nickname as a child?
Uh, Double juke. That was I was playing basketball in third grade, and I had this hero back then in the NBA, Dennis Johnson. He would do this double pump where he'd jump up and he'd hang in the air, and he basically a double pump where the guy would just kind of like go to the ground. He'd still be up in the air, and then he'd make the basket. And in third grade, I was trying to do this, and like my coach, like he stops the practice. He's like, "Wait, what is this? What's this double juke you're doing?" And like he thought it was fundamentally unsound. I thought it was cool. And then of course everybody on the team picked up on it. So everybody called me double juke or dub juke sometimes. Double juke.
That is pretty funny. That's pretty interesting.
Third grade, man.
And it's stuck, huh? Wow. Number two, are you a morning person or a night owl?
Man, well, I used to be a night owl before I had little kids. The little kids wear me out. It's sad. I'm neither, because I either want to be getting up early or I want to be staying up late so I can get my stuff done in life, right? But the kids wear me out because the moment I'm asked to read a story, they get wired with my story. I'm just like, by page 2 of Dr. Seuss or whatever, I'm yawning and I'm ready for bed. And you know, so I'll go to bed at like 10, which is early compared to my older days, or younger days. And getting up, I get up early. I'm not one of these 4 o'clock people. I mean, all the power to you. Can't do that when it's like that dark, and especially when it's cold. The bed feels so warm. You really have to talk yourself into getting out of bed. Like the best thing you should do is get up, exercise, drink some water. But all I'm thinking about is coffee, and it's not natural for me. But yeah, out of necessity, I guess I have to be a morning person right now.
I'm checking the box. I'm taking a poll. I'm checking the box as a night because your natural tendencies is in night owl. So you
Yes.
get a night owl check, even though you're amber
Okay.
sleeperist.
Okay.
Just made up that word. You're amber something on that.
Okay.
Interesting. Okay. Number 3, what would be the first thing you'd do if you won the lottery?
Give it all charity, definitely. First thing I would do, I'd buy a single family residence. No, I'm just kidding.
We just talked about we're not buying any more houses. We're only investing that we'll rent there when we want to rent on the ocean.
Uh-huh. First thing I would do now, I would get I would turn that into a ton of income streams. You can never have enough income streams. And I'd keep doing what I'm doing. I love real estate, so I'm having fun with this. I mean, just like I'm already kind of have the kids' future sort of set up. I feel like I'm pretty well set up. So I would just take that money and add it to what I'm, growing already. Kind of have a strategy in place already. So that's a different answer than I would have had, 20 years ago. I'd be like, oh man, I'd be heading off to Tahiti. I don't know. I was never material. I'm never a material guy, but I do like to travel. So yeah, I'd definitely take some trips, around the world.
Very good. And number 5, the podcast is called Better Returns. So that's why this is a kind of a play on that. What's one piece of advice, one golden nugget you would give to new passive investors to help them get better returns?
Don't suffer from paralysis by analysis. Don't wait for the perfect deal. Definitely do your homework, do your due diligence on who you're investing with, where they're investing. But I see people, they let 5 years go by and they still haven't invested. So don't take your if you only got 50K, don't invest it into one deal. But build up that income and try it out. Try a few and continue educating yourself. Be ready, but don't wait too long. Just don't suffer from paralysis by analysis.
Really good advice. I think a lot of people do that.
Very
good. Excellent nugget there, Rick. So tell the listener how they can get a hold of you.
Best way is to go by the website at www.fortressfederation.com. There's a bunch of free content up there. You can get a free guide at fortressfederation.com/guide. And that is kind of just a quick start guide on investing in syndications, which is what we focus on. So that's the best way.
Excellent. We'll put it in the show notes so they'll be able to reach out to you. And again, I can't say enough good things about your monthly newsletter. Subscribe. That's all I'm going to say to the listener.
You're the man, Matt. I appreciate that, man.
Absolute pleasure having you on the show today, Rick. I really appreciate your time.
Oh, yeah. It's been a blast. Let's do it again.
All right. We will do. Thanks.
All right. See you, man.
And that's a wrap. Thank you for listening to Better Returns, brought to you by Hanson Holdings. If you enjoyed this episode, please leave a 5-star review because it helps others discover this valuable content. If you would like to earn truly hands-off passive income, go to hansonholdings.com, where we help you invest in large apartment complexes to grow your family's wealth. See you next week with another awesome episode. Have a great day.